Everyone, and welcome to our VectorVest YouTube live presentation, Hot Stocks for October, also known as Hottober, baby. So today we're going to talk about some stocks that you can take a look at. Somebody already talked about the Patriots, really? Wow. Anyway, I'm going to ignore that because I'm a Giants fan. Anyway, thank you all for being here, taking time out of your day for this presentation. We're glad to be here. My name is Glenn Tompkins. I'm a senior instructor here at VectorVest, and I am joined here with three of my most esteemed colleagues, starting with Steve Chappell, Todd Schaefer, and Patrick France. They will introduce themselves before they opine. That's a good word, right, Todd? Before they opine about the stock picks that they will get into as well. So, you're here. What is the software we're talking about? If you're new, we're talking about VectorVest. VectorVest is a stock analysis and portfolio management system. It's one of the best softwares out there to help you to analyze stocks in every degree available to you. We're going to help you to know when to buy, what to buy, and when to sell. Keeping all of that in mind, you also need to know what your stocks are, if they're safe, if they're undervalued, if they're rising in price, or if it's the right time to even buy. So VectorVest takes all of that information and we streamline it into something that is very usable from the standpoint of any investor in the market, whether you're an aggressive trader, you're a prudent investor, you're a long-term investor, and many of you may even be speculative traders. With that, you have the opportunity to use the software no matter what type of investor you are. And we time the market. We have a timing signal for every type of investor as well. So you can look at us pretty much as a one-stop source for your analyzation of all stocks. Did I say that right? Analyzation?
Questionable.
Questionable. Well,
could be a Glenism.
Well, it could be a Glenism. So many of you will be introduced to some Glenisms along the way, and that is what we do. So that's what VectorVest is all about. This Hot Stocks panels, this is the fourth panel that we've done. It looks like we're doing them once a month now. And the Hot Stock panel uses instructors, high class, high value instructors within the VectorVest software. I put you all on the pedestal. Do not fail me now.
Just been promoted.
Yes, do not fail me now. All right, so put a lot of pressure on these folks, but you know something? They really know what they're talking about. They've all been here in excess of 10 years. Even you? Not quite?
9.
Okay, that's close. All right, so in excess of 10 years or more, and if we average it all in, then average in Patrick at least 10 years. So we use the curve on that. We use the bell curve.
All right, I'm cool with that.
A lot of knowledge here, a lot of information, a lot of personal feedback that you'll hear. So that's the importance of the panel. We all will use the VectorVest software to analyze stocks. And somewhere along the line, in the end, towards the end of this presentation, we're going to take stocks from you guys. So throughout the presentation, type some stocks in there that you want us to look at. We're going to do the best that we can to look at as many as we can. So if we don't look at yours, don't get ticked off. We're going to do the best that we can to look at as many stocks as we can. All right? Now, if you like this event, don't be afraid to share it. All right? As these videos come out, comment on the videos. Each one of us will talk about stocks individually. Tell us what you think about the picks, whether you like them, whether you don't like them, whether you like the hot panel or not. Put some comments in the videos that we put up on YouTube. Let us know what you feel, because you guys have a voice. And if you want to see more of this, tell us in those comments what you'd like to see. Because again, you have a voice. We will grow our footprint on YouTube, but it's going to happen only if you participate within that. I'm sure we've got a lot of people in there, so we are going to get to the hot picks. I'm just making sure that we get through all of the things that we need to get through. So don't forget, if you are not already subscribed to our YouTube channel, subscribe. Number 2, if you like it, like it. Number 3, share it. So subscribe, like, and share, especially if there's other people that you know that will like what we have here. Today, if you type in the room, if you do type in the room, Everyone will be entered into a contest for a free giveaway to the 2020 Tampa 2-Day Live Seminar. All right, so you have to, in order to get that, you have to type in Tampa. I just did that on the fly. If you want to be part of the contest, you have to type in the word Tampa. And if you do, you will be put into the drawing for a free registration. You got to go. Oh, you got to go to the link. So don't type Tampa. Never mind. Don't listen to me. Don't type Tampa. We're going to give you a link. Can I do that now, Joey? Bring this over. So if you want, yeah, that's what I get for flying by the seat of my pants. First tab. This is the giveaway, the 2020 2-day investment seminar. Don't type Tampa. I already told you. Don't type. Don't.
You said it first. And now you're
All
saying
right. So
not
now, don't type Tampa. You have to go to this link right here, which is VectorVest.com/events. /win? Oh, /win. WIN. All right.
Some contrarians in the room. I like that.
There's a lot of contrarianism. All right, here's how much time you still have left to enter, and Tampa's is still coming in. Don't type Tampa. That was my fault. All right, here's the link. www.vectorvest.com/win. WIN. So everybody's still typing. There must be a delay. That's right. So who put in Miami? We're not going to be in Miami. Somebody typed he wanted to be contrarian. We're not going to be in Miami. We're going to be in Tampa. But this is the link. This is the link that you're looking at. Put your first name, last name, email address, confirm your email, and submit. That is how you submit for the contest. It's this link right here. All right, let me move this back over. All right. Now that I think I've gotten all, and the cutoff will be at 2:50, so there is a timer at the bottom. There's a timer at the bottom of the page that shows you how much time you have left. Excuse me. Cutoff is at 2:50, and at that time, Steve Chappell is going to give you is going to talk a little bit about the Tampa 2-Day since he will be there. All right, with that, we're going to start with the picks of the panel, and I'm hosting. And guess what? I get to go first. So we're going to go to the graphs tab in the software. And my first pick of the hot stock panel, also remember, is known as Hottober. Keep that in mind. Hottober. All right, first stock, DH Horton. DHI or DR Horton. It's in the building residential commercial. And if you are a subscriber to the software, you see that, Patrick?
I see that.
Okay. You'll know that at any given time, you can look at our industry's viewer and see what the hottest industry is, no matter what's going on in the market. So I love simplicity. I took the simplicity of looking at some of the hottest industries. Building residential commercial has been on fire en fuego for the last month. All right, so DHI, here's the stock shown in candlesticks. I also have support and resistance. DHI also traded in a little bit of a channel after moving up prior in the early month or so of the last 3 months. This is a 3-month graph. And then it broke out of that level of resistance, which was sitting at about a number that I can't read. Sorry, well, it broke above that level of resistance. How about that? And once it did, it went up nicely, tested that level of now prior resistance as a level of support. And what did it do? It bounced up again, hit a new 3-month high. Today's activity shows a green candle, but it is a closed green candle, which means the price started at the top of the candle and pulled back today. Now, even with the pullback of price today, it is still higher than yesterday's close. And the close price yesterday was $52.92. We're sitting 1 cent higher than that. Now, if we break above yesterday's close of $52.92, we're right smack dab at it. If it goes to $52.91, this will automatically become a red candle. Now, because the candle is closed, a little bit of give back today is probably not the right day to buy it, but I do like things like the earnings per share rising over the last 3 months. I also like that the stock utilizing a 20-day exponential moving average, which is denoted by this purple line, has served as a beautiful trend line, and all throughout the 3 months has done a good job supporting the stock's continual upside move. So I'd like that the stock hit a new high yesterday. It didn't confirm and move higher today, but still in a nice 45-degree angle. Volume is pretty steady. Earnings per share looks good. And the stock loved that it broke out of the channel and went up. Even with that test, pulled back down and went up some more. So that is my first pick. And now I'm going to ask for comments from my esteemed colleagues to see if they have any more they want to add. No? Great. We'll move. Oh, okay. No, okay. We'll start with you, Steve. What do you think?
Well, since I also picked a home builder, I think you're fishing down the right rabbit hole.
Okay. I don't usually fish for rabbits, but...
Well, you're trying to pull the rabbit out of the hat then.
Okay. There you go.
Yeah, the sector is doing well. When I was looking at the Midas Touch list, there are a lot of builders on that list. So the sector itself is doing well. Mm-hmm. And it's trending nicely, so right on.
I mean, it looks good. Only thing, a little bit of a tall wick yesterday, but volume really doesn't give any confirmation that. Volume's light today, so yeah, uptrend still remains pretty good.
Maybe you want to give them some insight on when to buy.
All right, so when to buy. How about looking at making sure that the stock's price goes a little higher than the high? Being that it's a $52 stock, $53 stock, I would say put in a buy stop order about 12 cents higher than that 3-month high as a means to get in. That helps to ensure that you're buying still into a rising equity. And if you bought it like right now, who's to say that that level of the high won't serve as a good resistance and the stock's price pulls back? Make sure you're always buying into rising stocks, but you also want a rising market. Keep that in the back of your mind as well. But right now, I would prefer for us to be in a rising stock. When you buy into it, 12 cents higher than the most recent high should be a good level to get in. Now, as far as getting out, why not use that 20-day exponential moving average? If it's serving as a beautiful support line, if you get into this stock and it breaks below that 20-day exponential moving average, may be a great opportunity to pull the trigger, take either profits or mitigate loss. All right? Let's go to the next stock, which is also in the home builders, which is Pulte Homes, PHM. Sort of kind of the same scenario. Let's put this on a 3-month graph as well. Look at that beautiful equity curve. All right, stock is steadily moving higher. It was under the 20-day exponential moving average early in the 3-month time period, but once it broke above that 20-day and broke above that nice level of resistance sitting at that number that I can't read as well, but look at that breakout. This is why we look at support and resistance. Breakout above resistance, look at that. It never looked back. The 20-day exponential moving average also serving as a good level of support. The stock hit a new high about 3 days ago. Again, the same kind of scenario. It's a beautiful stock for a hot stock in Hottober, and I really would like to see it break above that level of resistance or that level of the high, which would be about 12 cents higher than that level. Volume, watch volume a little bit, pulling back a little bit, but overall pretty steady. Look at that earnings. Earnings jumped up back in August, and it's been flat, but still positive earnings sitting at $3.64. So another good stock from that perspective. Love the 20-day exponential moving average. And every time it pulls back to that level of the 20, it tends to kiss a little bit, just like Prince. It kisses. And then it runs back up again, kisses, runs back up again, and right now moving a tad bit sideways. Look to see about 12 cents higher than the high. Any input?
I was going to say, it's just another example. You know, this market's been volatile and down, and here we've got a couple stocks that have been persistent through that craziness, and it's a very focused market, right? There aren't a lot of stocks, let alone broader industries and sectors, that have persistent uptrends. So, okay, if we're rotating out of these high momentum stocks into something more consistent, right, I'm okay with that, particularly as the market tries to figure out what it wants to do next.
I like the idea of, even with the volatility in the market, those two have been steadily moving higher. Normally, the market's trend affects 80% of the stocks in the market. These are a couple of outliers based on the strongnosity of the industry. That's a Glenism.
If I can vamp a little bit here off of, we had a comment by Joff99, double X. Looks like, why not say software desktop or shippos? Those are hot industries as well. I want to show you something on the shipping companies. If we go to, let's go to the homepage here real quick, Glenn. And where's their industries? Over
Right
there.
here.
There you go.
Building.
So go to transportation.
Transportation.
Yeah. Right click and view the industry graph there. I showed this in the Jockey Club this morning, and I think it's kind of telltale on what these companies are going through right now. If you give me it's a 1 year?
Yes.
Perfect. So this is the transportation shipping industry. So it represents the 12 or so, about a baker's dozen at least, companies, TK, Scorpio, the whole gamut. And what they're running up against, what I see, is they're getting towards those high water marks that they've been hitting throughout the year from time to time. These shippers are very, very volatile. And while they have truly been one of the best places to be in the stock market for the last 4 or 5 days, I would be careful with the shippers for the moment. Now, if they can begin to eclipse those watermarks there, and you can see the earnings per share on the shippers on the bottom, they could really come to life in a big way and truly still be one of the very bright spots in the market. But not until they can overcome some of those peaks do I think I want to go and play with the shippers at this stage.
Yeah, they stumbled today, but they have been a great story.
Yeah.
I ran across that same phenomenon in the data by looking at the RT deltas over the past 10 days.
Right.
And shippers are just, the transport sector is just blowing everybody else out of the water.
And guess what? The shippers will do that. They will run when they run. And look at these opportunities. When they run for a couple of weeks. When they fall,
And they
fall hard.
And they run strong.
And again, right here, they run, and then they fell. This fall wasn't nearly as deep as that fall, but where are we right again? And if history repeats itself time and time again, yes, Joff, I understand the shippers are running, and Steve brought up that good point. Look at where they are right now, and each time that's happened, what have they done? They've fallen hard. So good point.
Now again,
If it can break above,
with a
though.
break above, then I really think that in a bigger way, maybe even some institutional buying could resume, something like that, if they can break through those high water marks.
And look at that, it's got some room to run. After it breaks above, it's got some room to run, at least up to the 1 year high of about $13.
Keep an eye on it though, because every time we've come up to that resistance,
That's what I
look
mean.
at what volume's done. It's never really been any conviction behind that. There's been a lot of people piling into it on this most recent run.
Very true.
Yep.
Anybody want to take bets if we see dry ships start to show up in the Jockey Club?
Dry ships
in
is
the
not
next
in
2 weeks?
business anymore.
Out of the database,
Yeah,
but
dry ships is no longer there. But there's a lot of other shippers.
the one to watch out for is
TNK?
is the little one, TNK.
Yeah, TNK.
TK
Yep.
shipping, yeah.
TNK, yeah.
Is it TNK?
Well, that's the symbol,
Yeah.
TNK.
Okay. But
Be
Josh,
fun,
good
though.
point. Good point. But I like what Patrick said, that even as it's approaching this level of resistance again, this is the time where more people are more involved in it. So between Steve bringing up this graph and Patrick's input on it, it is still something to watch.
It's
But
something to watch.
but just see if it can break through that level of resistance.
Absolutely.
All right. Let me close out of that. Let's go back to the graphs. Did we talk about Pulte already?
You did, I think.
Okay. Then let's keep on moving. And my last one is IMPUY. Now, this is a pink sheet. All right, it's a pink sheet, but it's in mining other, looking at platinum. So I did some research on this stock before I picked it. IMPUY is a South African platinum mine. And what they did is recently, within the last couple of days, they bought North American Platinum, which is a Canadian-based company. This is the first time that they've bought outside of Africa as far as a mine. All right, and they are extremely confident about platinum continuing to rise. Look at the earnings per share on this company. It is a lower dollar stock. It is gappy at times, but even with the gappiness, the 20-day moving average, even on this lower dollar stock, is holding it. Look at that. And normally on a lower dollar stock, moving averages like 20 tend to not work nearly as well. So the company seems to be doing the right things, expanding now outside of Africa, outside of South Africa, and very confident on the platinum industry moving up nicely. Earnings per share for the company is moving up. And from a hot stock perspective, as a lower dollar stock, it's hard to find low dollar stocks that have this kind of an equity curve. Broke out of a level of resistance, tested it, and bounced back off. This is why we look at support and resistance on a graph. And again, the volume, though, does make me a little nervous. When they spike, they spike. We get to the little tall trees of volume, but other days we don't get it. So that is something to keep in mind. Good opportunity, in this case, at a $6, $7 stock, 5 cents higher than the high. If the stock decides to pull back, you have a good level of support with this 20-day exponential moving average. So wait 5 cents higher than the high. Make sure you're buying into a rising stock in a rising market. Steve?
Looks great to me. It really does.
Okay.
Just eyeballing it, the volume looks like we're under accumulation, right? And you're accelerating into the current price, so I'm loving all that.
Yep.
Obviously, I'd like to see the closing high be the new high too, but we're in the right track.
Patrick?
One thing that scares me is how much it jumps. Just like with some ETFs that you see that just gap up big one day, gap down big the next day. Anytime I see that, I tend to stay away from those, but hey, different strokes for different folks.
But I'm going to take that. Do you notice that the majority of the gaps are to the upside more so than to the downside?
But if it starts reversing trend, those gaps are going to go against you, and I don't want to have to worry about that headache.
Well, and if that's the case, that's why you have a plan in place to know when to get out. I like that 20-day exponential moving average, or even look at another level of support or
You
resistance.
get the new high, that prior pivot is fine.
And that's,
Off the
you talk
doji.
about right here or here?
The pullback, the last swing low,
Here?
2 bars ago.
Oh, right here.
Yeah.
Yeah.
There you go. So now that headache goes away that Patrick would have because it gets you out a little quicker. But a lower dollar stock is going to be a little bit more volatile, but man, I like the levels. So
Patrick's point, it could gap hard against you the next day and sting you, but
Yeah, look at like the day that it gapped down to support right around the beginning of September. Yeah. Go for it a little bit.
here?
Yeah. I don't want to be waking up the next day or at work and all of a sudden look at my portfolio and see the stock gap down 50 cents a share on a $6 stock.
And then, so then what do? You sit there and
Then
and
your
this
order
is-
doesn't get filled. Then you all of a sudden you miss it. Then you have to rush in and
So then this is where discipline comes in. If you say I've got a level of resistance, current level of support, give it a little bit more room. It is a lower dollar stock. It's a little bit more volatile. How about that level? That discipline pays off. It bounced. Would you still been a happy individual? You would have gotten nervous here. You still would have had a plan to get out. The plan saved you and kept you in. And I think that happens a lot. I think a lot of people, when you do get into a lower dollar stock, you see that happen and you panic. Stop panicking. That's why you have a plan. The plan says, well, I got a level of support now. Let's see what happens. Stick to the plan. And again, a lot of people that think that way, these things happen over and over again. So
here's your other choice, right? So to Patrick's point, if you're concerned about that, right? So what do? Maybe I play the 20 instead of that pivot.
and it still helps.
Take a smaller position.
But why would you have chosen the 20 at that point? Because before that, I mean, it was holding a little bit, but it wasn't really as consistent as what we've seen with the other trend lines so far.
So
it's
then
holding
why would
well
I
over the
put the
past
20? It broke above
3 months,
resistance and it was above the 20. I got two opportunities of why I want to stay in.
You could look at more. The other mitigating factor here is that earnings performance.
Yeah.
Right?
Yep. There you go. So I like the pushback, even though it was horrible. I like the pushback.
Well, we like to push back.
Well, I know you do, but my picks are going to be the best, and that's the way. I'm the host. That's the way that happens. All right. Now I take.
So
I
short
take
this stock tomorrow?
Is it not? All right. So those are my 3 picks and why I picked them. And again, when these videos come out, if you like the picks, please comment on the videos. The videos go out. Let us know what you think. All right? And I think that that's important. Now, from here, we're going to move to Steve's stocks. And Steve's first stock, IMPY, should be KBH. Let's put that up for Steve. But he's going to introduce himself first.
All right, my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. Man, I've been around 19 years now, so it's been a fun ride and lots of lots more years to go. I'm hopeful for anyway, God willing. So let's get to the actual chart then, I guess. So with KB Home, one of the things I like about KB's is its price structure in the industry. All of them have looked pretty good. This one, on a day-to-day basis, doesn't cause you a lot of heartburn typically. Right now it's hitting a new high. It's showing a little bit more strength even today than some of its peers are. Had a little bit of stronger acceleration with earnings, albeit mostly by way of a pop here in late September, early October. But I don't expect the strength in the home builders to dissipate here over the coming months either, given the current economic climate that we're in and low interest rates and lots of fun things going on like that. But in fact, that's probably in large part why we're getting some good run out of the home builders altogether. But anyway, all of that personal stuff aside, kind of feelings, emotions, and those kinds of things, just looking at the facts, it's got maybe the stronger earnings growth here recently, should give it some stronger push, all things being equal. That's always been my experience. The higher a company's forecasted earnings pushes, the more potential it has over the next 1 year period. So I think that we're in good water here with KB Home. They're all good picks. They're coming in, this stock's coming in at a premium now. It's trading above what we would call fair value, but that's going to be true of many stocks on the backside of a 9 to 10 year bull market that are of any kind of good value. You're typically going to be running at what we would call trading at a premium at this stage. So we're not the only ones that know about it, and it's on a good run, and that's why I picked it.
Yep, you're also getting a nice little breakout here of your 6-day consolidation.
Yep,
Right.
had a nice little mini pullback.
Yep.
Yep.
I'd just be careful on volume.
Yep,
About it.
volume is dissipating a little bit. That's always a little bit of a mild concern, I would say, sure. So the guidance on when to buy, for me it's always twofold, and it's always the same. I'm certainly willing to buy KB Home, even on the light volume, with a higher move at the open tomorrow, to the tune of about 12 to 13 cents. Take your pick. I tend to use 12 and a half by the book. My brokerage allows me to do that, but that would be my guidance on when to buy it if it continues to rise. If it doesn't continue to rise, but the industry remains healthy, I would consider a pullback to that 20 MA as another opportunity to find a couple of kiss candles, or at least one. Look for the higher open the following trading day, and this similar tactic, just playing a little bit of a pullback from that perspective. So either way.
And actually, that happened back here.
Yeah.
When it pulled back, and look at that pullback, that would have been a good day to get in.
That's right.
And now you would have held it, and you still would have been happy.
Yep.
Looking at the indicators, and there's not a ton of indicators that we're looking at. We're looking at very simple indicators. And the more you simplify your investing, the easier it is to make money without pulling your hair out, biting your nails, all that stuff. Keep it simple. Keep it simple, Steve. There it is, the KISS method.
Well,
keep it simple, Steve.
This last little bit, it might seem like maybe the least important, but it's potentially the most important, the order execution side, because if you looked at my two picks from last month, the order execution would have saved your bacon, because neither one of them would have triggered. So it's a very important ingredient. No matter how good the chart looks, and no matter how good things truly are, the stock can still fall out of favor. So the order execution, knowing where your stops are, all those things are, knowing when you're going to get in before you do, those are always very important things to know. So next stop?
Yes.
Because we're getting a little crimped for time, I think. So we're going to go gold. I don't believe that the run in gold is over. I think the economic uncertainty that is so prevalent everywhere you turn and look these days will continue. It seems like from some of the comments we had yesterday from Mr. Powell that he was very clear, wasn't he? I don't know how many, did you guys count? How many times did he say this is not QE?
Yeah.
And then would make a dramatic pause and say it again, this is not going to be QE. I think any kind of interest rate reduction in the future and a little bit of the leveling of the playing field across the global economic situation that we're in only adds to the fire. Certainly doesn't hurt. One thing to watch would be the strength of the dollar, because even if we find ourselves, in a declining interest rate environment, it's possible that the dollar stays strong because Europe is experiencing a ton of pain. I saw Australia last month go negative on their interest rates. There are 7 countries worldwide now that have negative interest rates. So it's an interesting time that we're living through.
I hope we don't get there.
I know, but I hope all of this, I think rather, all of this uncertainty just kind of adds to the fire here. And it was funny for me watching the comments on that thing with Pal yesterday, how everybody was pushing Bitcoin and all these other things as alternatives. But I think gold is a real alternative, and this is one of the bright spots in all of the gold market. Their earnings growth is tremendous. There's others that I liked. I think maybe somebody's got one today. Kirkland Lake is one that I presented a couple of months ago. I still think that's best of breed in all the gold market. But this is more of a, I wouldn't say small company, but more of a, potentially more of an explosive kind of a pick. Put value on there real quick, Glenn. I mean, this guy's tracking $6.51. We got it valued at near $10 and climbing. And a large part of that is due to the acceleration in earnings growth that they have. It's super hot right now. And I generally don't like buying stocks when we're this far extended above the 20-day moving average, but my recipe never changes because I'm willing to use that kind of as a guide going forward on the trade. So a higher move above the high today or a pullback to the 20, just like it pulled back about a week ago to the 20 and popped, I would look for entry into Sibanye, one of the strongest growth stocks right now in the gold market. And I'll leave it at that.
And interesting that it's a sub $10 stock that's undervalued and moving up, and earnings per share. This is like the best of all worlds put together in one stock. It's hot, it's undervalued, and it's growing in earnings. That's a good roundabout hot stock to take a look at. All right, you ready for your next stock?
Yeah, so we're going to go with the wild card pick. This was a hot stock pick from this panel a couple of months ago, which could have produced, conservatively about a 15% gain off that earnings move. Last time earnings was announced, we were looking at how well it was holding off of support, Glenn, on that pop right there. We were looking a couple of green candles to the right of the red pullback candle as our entry last time, and the stock continued on a pretty good run. You had a couple of things come out to hurt this company. This company, first of all, for those that may not remember from last time, was up more than 400% this year. And that's because they are one of the strongest growth rate stocks in all the stock market. There was a crazy report put out by a company that will remain nameless, and there was some talk on a very important talk show hosted by CNBC that all kind of collided at the same time. And really, I'm happy to see that we're back to levels pre-last earnings announcement where they said that they had 60% earnings growth for the foreseeable near future. I think it's an interesting level to think about this stock again. The reason I have that moving average on there, is that a 40 or 50?
That is the 40-day exponential.
All right, so I'm using a 40-day moving average here on this one because just trying to get a little bit of a leg up on the potential for renewed interest on the institutional side, which will generally come in around the 50. I'm going to like this stock a lot more, guys, not tomorrow, maybe not even the next day, but as it starts to move and separate above the 40, even the 50 average, and really take out that prior swing high, that's when I'm going to be licking my chops and looking to buy end phase again. I really like the run potential for the next month or so because their next round of earnings announcements comes on November the 5th, if I'm not mistaken. I believe that to be the next earnings date. You can look that up just to verify, but that's my recent knowledge. And I find it hard to believe that there's going to be a lot of short interest on this stock or things like that heading into that next round because over the last two, all they've done is improve and blow estimates out of the water 2 consecutive reports in a row. So I think with all of that, I think it sets up well for some pretty good stock price appreciation, at least into the earnings announcement. I would much rather be maybe in a call calendar spread, or maybe even sell a put to finance a call in advance of that earnings announcement. And in other words, desensitize my monetary investment at least out of the gate, be willing to be put one of the strongest growth stocks in all of the stock market if things went south, and having a free ride if things go really good. So that's all I have to say about Enphase.
And when we were looking at this, one of the first things I said to Steve, I said, this is a tough pick.
It is.
But I like the way he justified the pick in that, look at that, hit that. I drew this level up here, just eyeballing it. A good level of support sitting at about $20.10. Bounce, went up, creates another level of resistance, actually, if you look at it. And where are we? We're right there. So the stock is doing a little bit of sideways mumbo, all right? And look at that.
Again, we need to get above that level before we're interested anyway.
That is absolutely right. So now looking at getting above that moving average and then compound that with getting out of that level of resistance, that last swing high, man, the stock does have the ability to run up to that next high. Biggest thing that I do like about that is that the earnings, no matter what was said on TV or what company said, whatever they said about the company still makes money. The company still makes money.
Yeah, they had their largest order on record just about a few weeks ago out to Australia. So I don't see at least any signs and symptoms of any kind of slowdown. From what I've seen so far, they call it an earnings surprise for a reason, right?
Yeah.
but I think above the swing high, we're back into good water here, and most of the craziness should be behind us at that point.
Yeah, my take on it was that after that run, right, they got caught up in that rotation out of growth.
Yep.
And a bunch of profit taking.
That too. I mean, all that fun stuff was kind of all happening at the same time.
It was the convergence. It was the perfect storm. It was the perfect storm. I like that. That's a good movie, by the way.
Being up 400% in a calendar year, that's actually a pretty mini pullback.
As long as it's hitting lower highs and lower lows, I'm staying away from it.
Yeah, for sure. Yeah, again, you just got to take out that swing high.
All right.
Yeah.
All right. So now next on the list is Patrick.
I'll go.
All right, Patrick, EMPH, and next GNRC.
And this is actually going to piggyback kind of off of EMPH. So this mysterious report you keep referring to also mentioned this stock as the next big ENPH because they're starting to move into that. Plus, they have other business already there that's been more of their consistent business that's made their growth as consistent as it has been. When EMPH has dropped a lot, this stock has pulled back a little bit with the market, but once again, recovered nicely. The stochastics was oversold, hit right into that oversold territory below 20, started popping. Today, the 3 just crossed above the 8. I liked this stock a month or two ago. I still like it today. You can't really go wrong with that earnings. Smooth, consistent. It's not necessarily the hottest moving stock, especially, a stock that I would suggest usually is a little bit more aggressive. But, for a consistent winner, this is a very easy pick to go with. At this stage, it's rallying here today. It's slightly off of its highs. If you wanted to play a little bit more conservative approach, just put a line of resistance right at that high there. And if it breaks above that point, that would be your entry. You could use, buy stop limit order, go with what these guys are saying, 12.5 cents above. So that would put you at basically, 85? Just rounded off 85 there. If it hits 85, get filled. Yeah, this stock looks pretty good to me.
I like that historically. Look at that nice run up. It does have great upside if it can break above that level. This stock has just been hitting high after high after high after high. This is on 1 year graph, after high, pulled back, and if it does break above that level of resistance, after coming out of the level of being oversold, and the earnings look as good as it does, that could be a nice play with some more room to the upside. Todd, you're
Yeah,
shaking your
I like
head.
it, yeah.
I was,
Particularly on the break of the high. So
Oh, here comes in-phase guy.
phase guy.
I don't see the argument because they really are two different spectrums of what they do. Generac is a generator company that's getting ready to get into the solar, more heavily into the solar capability thereof. So it's two totally different things. Enphase focuses on the ability to network things together and create grids. It's really two different businesses, and that's what I mean about, kind of these pump and dump newsletters and things. Now, going back to where I'd like to focus on this would be, I agree, a break of the high and the stock looks great, and there's no denying that the earnings are very, very strong here. So, I mean, I like the pick. Lumping them with Enphase, I think, is a mistake.
Okay.
That's just me.
I like that. Yeah. All right.
I don't think they're necessarily lumping them. I think they're just edging in on their turf a little bit, trying to.
I don't believe that that's true, Patrick.
They probably could be too. I don't know enough about Generac to get into that conversation. But I know that
That's
Steve
a
has done a
conversation-
lot
That's
for
another
EMP.
conversation for another day.
Okay.
Because there's lots of moving parts there, but they're two totally different things.
Excellent. All right. Let's go to Patrick's next pick. All right. SQQQ.
All right. So what I like about this is a short-term trade. I have a trend line drawn on it. I think we're looking at a 3-month. Yeah, we're looking at a 3-month time frame right now. SQQQ's gone from 30 to a high of 36. Not a bad trade in a very short period of time. If it can continue this uptrend, it could go reach that previous high around, let's call that 39. I do see a little bit of weakness from it, especially off that most recent high a few days ago, where you see a lot of selling pressure coming in as it hit that 36 marker. 3 is potentially crossing below the 8, so you do see some weakness on that aspect of things. Stochastics hit almost that overbought territory, started pulling back a little bit, but at the same time, as you see, I have that trend line drawn on there, and so you're giving up, if you did buy it today, let's say you bought it this morning when the markets were down before they started reversing, or they were lower at that point and they were starting to look like they were heading south. You have a very, very tight stop with that trend line to protect yourself. That's 32 of that. So you're at most giving back 30, 40 cents max before it breaks that line in the sand there. And the great thing about this that I like is, it does have some weakness showing, but if it does, continue, it does break that downtrend line or that trend line. Because it's an ETF, it has a pair. So if you go to the side over on the right,
Okay.
like you're showing in next stock. No, all the way to the right.
Scroll bar.
Yeah, scroll bar.
Okay.
Click on the scroll bar. Here you go. Just the exact opposite of what we were seeing with SQQQ. It's been in a steady decline here over the last 2-3 weeks or so. It's testing up against that downtrend line right now. If it can't break above it, then you're already in SQQQ. But if it breaks above, or if the SQQQ breaks below that trend line, then you can just switch your order, get into TQQQ, and ride that uptrend, since it is breaking that downtrend line at this stage. So if the market continues to get ugly, like it has over the last few weeks, you're staying in SQQQ. But the great thing about this is if you're wrong, you have a backup plan just in case that can easily make up your loss and then some. The primary wave is for the first time up today in quite some time over the last few weeks. So, you do have that going for you. But tomorrow is really going to be a deciding factor. If you're not into it today, tomorrow is really going to be a deciding factor. If we get a big up day, follow through from the primary wave up situation that we're in right now, then TQQQ would probably be the best bet. But if we start to fall away from this trend line tomorrow, we go back to a primary wave down, then SQQQ would be my entry.
I just want to put out one disclaimer, especially if you're relatively new to the market. Be careful with triple leverage ETFs. They are a trading vehicle, not more of a investing vehicle. So just be careful with that. I like the flip-flop of the trade, the pair of the trade. So if one is not working, the other one is. But keep in mind, and I hear this a lot by way of emails, is it's tough, especially if you're newer, trading triple leverage ETFs. Just be careful with that. That's my only caveat in regards to that. Just be careful from that perspective.
Oh yeah, and with that, just a little insight is, typically I wouldn't have chosen an ETF, especially a triple leverage ETF for what we're talking about here as a hot pick. The reason I liked it though is because we have that consistent trend line right now. Not all the time you get that opportunity, but the opportunity in the setup right now I feel like is prime for a break one way or the other. So that's why, I typically wouldn't recommend this, just throwing that out there. But just the setup right now, I feel like brings it as a potential hot pick for at least a short-term trader.
Okay. Anybody else?
Well, our boss is going to be the catalyst, maybe one way or the other, right?
This is a news-driven market.
So,
I'm with you on that.
When I say the boss, I mean Trump, of course. We'll see. I expect that there's probably going to be some kind of tweet, true or otherwise, indicating that progress is being made. But how the market takes that and what the general reaction is, who knows? So I like the fact that at least because these are fairly, well, they're more on the risk side. I like the triples, but that's me. I'm more of a trader, I guess. But yeah, I think having them prepared both ways is a good idea. I would actually lean towards probably TQQQ is going to be the one most likely to trigger, but we'll see. And no matter which one does, you have a solution. So I like that. I like the fact that you introduced pairs. I think there's value in that. And Glenn's also right. What'll drive you nuts here is you can be right on direction and still find yourself 8-9% underwater in a day. But if you're able to hang in there, could make 20%, so
Yeah.
they're not easy to trade. But the trend lines, I think, are a great guide here, and I like your picks.
Yeah, so you can see how gappy and whippy the price action is, right? So kind of echoing that same point is, well, okay, the broader trend, the established trend right now is to the downside, so I'm favoring that. The beauty of using the trend line is you can let some of that gappiness express itself. The place you get into trouble or into difficulty is if the market decides not to enter that trend and just decides to bounce around sideways for another week. Right? So then the 3 and 4 point daily swings
Can kill you.
can,
Or
well, they
at least
they can test your nerves.
There you go. That's
They
probably
will test your will.
Yeah.
Oh, also, I forgot to introduce myself.
Yeah, you need to do that.
Yes,
Yeah,
it's too late
Also,
now.
so my name is Patrick France, senior instructor here at VectorVest. I'm the mobile man. I primarily focus on our mobile application. I do a lot of the education work for that. I do our jockey club with some of these guys here as well. Also, every Thursday at 11 a.m. Eastern Time, we do a mobile training session on Facebook. So go to the browser bar at the top, type in facebook.com, search for VectorVest. Make sure to hit that follow button, the like button, so you get notified every time we go live on there as well. But 11 a.m. tomorrow, we'll be going live on Facebook. So make sure to tune in for that as well.
All right, so that's right. He did need to talk about that because he is the one. Everybody who's got a subscription has access to the app, and Patrick is the guy that supports the app and will show you how to use it. And it's every Thursday at 11 o'clock on Facebook. All right, thank you all for your picks. Right? Oh, sorry, forgot about Todd. Hi, Todd.
If you want to move on.
No. Here's Todd. So talk to everybody
I'm not
about
easily
yourself.
offended. First, my name is Todd Schaefer. I'm the manager of research for VectorVest. I'm working on my 13th year, lucky 13. So I hope there's nothing that I'm not aware of. All right. So probably my most regular contact with you folks is through the Successful Investing Quick Start course and the coaching that we do every Thursday. So if you're not aware of that, please make yourself available. Come on in the room. We're friendly folks, so we'll treat you well. For my picks, I like to give a little background to kind of set the stage for how I got to where I am. And last time I was with you guys, actually kind of similar market conditions where the market was soft, was pulling back, and when I'm in that kind of situation, I'm always curious to know what's working in the market. And so I like a top-down approach. And so on this go-around, let's go into the Unisearch tool. One of the easiest things I think that you can do is I go to the Delta Searches sectors, I prefer sectors, and look for the 10-day RT Delta. And just go ahead and run that search. So over the last 10 days, the delta is the percentage change of the RT value over the last 10 days. So just looking in that first column, you have the computed value, or at least you did. Hit search again, run search again, and I guess leave the columns alone.
Yeah.
The first thing I noticed is there are 4 sectors that are even accelerating over the last 10 days. Right, and so when I talk about focused market action, that's what I mean, is that there are a few accelerating sectors in this time frame. So, but I also want you to remember that in each of those sectors you have multiple industries. So if you go to the Delta Searches Industries and do the same thing, the 10-day delta on RT, here are the
Crypto.
Yeah, crypto, isn't that interesting? And contra ETFs.
Maybe those guys were right.
No, they
So
weren't.
these are but there's our friends in the shipping industry within the transportation sector, right? So these are the guys that are really booming. But remember, this is a narrower slice of the broader sector. So this gives you a feel for what's moving within the industry. So that's contextually sets the stage for me saying, well, okay, I know the market's been in pullback, that it's a fairly focused market. If I'm going to go looking for stocks to buy long in this environment, then yes, I want them to be trending and accelerating, but I also want to give consideration to their industry and sector. So for me, I went to the cherry picking, the first thing I always do is I just go to the cherry picking folder, look at the Midas Touch watch list. Yeah, go VST, that's fine. So every stock in the Midas Touch watch list, by definition, meets the criteria to be a Midas Touch stock. That its moving averages of stop price and the RT are all at 3-month highs, and that they're all moving positively, which is a great definition of uptrending stocks. Let's minimize the search bar there, Glenn. The search window, so you can see more of the data.
Not that
The toolbar.
The search window on the left.
Oh, this?
Yeah.
Yes. Folders.
Move that?
Yes.
Okay.
And then I like to do a custom sort here. We're sorted by VST, descending by default. I reconfigure the sort to be RT times CI. So I'm looking for stocks that are accelerating but also have persistent price patterns. Click OK. We resort the database. And now you can shrink the search parameters. But notice you're seeing a lot of the same players that these guys have been talking about already. Meritage Homes, right? We're right up in the builders and in the other sectors that we saw were accelerating. So my choice is coming out of this list. The first one that I ran across was Sun Communities, SUI. Now, there are other candidates here that have already been covered, right? So it's not to discount them at all. This stock, you can see, is a pricier stock at $150, right? So I don't see that we're in terms of the market performance, I'm not in an explosive growth phase in the market. So I'm pulling back a little bit from looking for the explosive growth phase in the stocks that I'm considering, right? But if I scroll to the right, part of the story of this also is the VectorVest analysis, the RV and the RS scores, right? So Sun Communities, their growth rate's not fantastic, but of that sector, 15% annualized growth rates is actually leading within the sector. Great safety scores, right? Currently, even have a dividend yield if you scroll over a little bit more of 2 points. Right? So I guess from this point, let's jump back to the graph and let's look at their graph. And one of the things that actually I didn't talk about on that screen, it's pretty overvalued as well, because this is, you can see, it's been on this long run, right? And look at that earnings performance, and you're at the end of you're at the mature end of a bull market, right? So it's not terribly surprising. I also noticed that the RT had been slowing a little, but we got a little uplift, this little uptick here, and put in the new high. So I'm really interested in seeing the breakout from here. Prices slowed over the last 2 sessions. I'm really interested in seeing this price action moving higher, right, for my entry. But I like the overall pattern. That 40-day, it's 40-day EMA, right?
Yes.
The 40-day is a fantastic support line, a trend line for the stock. That's just been a steady eddy. And the REIT sector was still in growth phase. All right, so that's pick number 1.
I like it. Me likey, me likey.
I like you. I just think you got to be careful, like you mentioned, the RT hitting lower highs. His price has been hitting higher highs. I mean, granted, it could hold that for a while, but momentum is waning a little bit at this new high. But I mean, ride the trend for as long as you have it.
I think holding some form of REIT is a great idea, and this is a surprise to me. I haven't seen one that's quite as steady as this in a while. You know, Jim brought NEE, Next Era, to the table a few months ago.
What was HEI? That was not a
That's HEICO, I
Yeah,
think. That's
yeah.
a defense stock.
Gotcha. Okay.
Okay, but this looks great, and it's new to me, so I like it even more.
And guess what? It's new to a lot of people out there. How about that? How about that? That's new to a lot of people out there.
Yeah.
Well, it was part of that rotation into safety too, right? So that's part of the performance reasons here.
Yeah.
There are several candidates within the cohort that have similar price patterns. These guys had the best growth rates.
How's their yield?
Earnings yield?
Earnings or
No, dividends, man.
dividends 2 points.
Yeah, it was 1.98. Yeah.
Reasonable.
Yeah.
Plus, you get the appreciation, you know.
Yeah.
That's a bonus.
Oh yeah.
So not really accelerating, right? Not what I typically look for on a growth basis, but I'm not in my typical place.
You get the paychecks.
Yeah.
Real quick before you go to your next stock, the winner of the 2-day stream pass is David Gibson.
All right, David.
David, let's clap for David.
David.
Woo. All right, so you got to now email marketing at VectorVest.com to get your free pass to the 2020 2-day Tampa deal. So just wanted to let you know. All right, I did all of that just for that. I think he deserved it.
Our next trade is Target. Now, the retail space is kind of interesting because if you take a look at that same analysis that I did, the retail industry.
Is this the one you want?
Yeah, go ahead and find it. That's fine.
Well, this is looking at the stocks.
Target's just further down the list. I found them both just scrolling the list.
Well, it ain't. I
Oh, you don't have enough? It's not in the top 20?
Lord have mercy on my soul. I'll do that. Todd tries my patience every day. We sit right
I
across
do that
from
just by breathing.
he sits right across from me, so we talk all day long. Okay, there's Target, man.
All right, so fundamentals a little bit better here. Still 13% growth rate, right? It's not knocking the ball out of the park here. But they've got solid fundamentals. Again, a dividend yield, 2.33%. The interesting part for me was they're in, maybe the easiest way to do this is just right-click on Target, go ahead and bring up the analysis report. If you look at the industry still has a positive RT value, but it had been decelerating. And you can see that in the industry graph. But it's been picking up. It's been in the uptick, right? We're also coming into the fall season, and they've been getting a lot of good press about not only during doing earnings and sales beats, but also forecasting a strong holiday season, right? So that's lending some of the momentum on the play. So let's go back to the stock graph. You can see the stock, just like the industry, had been flattening for months now, right? But here I am testing that resistance level, so I'm looking for the breakout. above that resistance level, the earnings, right? You got that nice earnings pop that should be driving us farther. There's no acceleration in RT unless you want to take it in the last month, right? But that's because I've been channeling. So I'm not so worried about that. This is one of those, I'm ready to pull the trigger. All I need is
A breakout.
a breakout.
I'm on board with retail is cyclical, but you are getting into the holiday season. Target, as many people call it. If they're forecasting already good sales going into the holiday season, that could help to push you up against or through that level of resistance. Earnings look great. Company makes money. Company, and that's the engine that drives the stock's price higher. Earnings. And if they're making money, it's going to make sense. Haha, you get it? Money?
Dollars and.
If it's making, all right, fine. If it's making dollars, it's making sense. Altogether, it makes sense. Steve?
I'm going to venture a guess here because maybe you know the answer. Probably best of breed in the space.
I didn't look at the whole industry wrap. I was working off of that sheet, but I'm going to venture that yes, it's very.
I think it's safe to say, Todd, that you and I are on the right track. That has been an awful sore spot in the market. Major chains, So here's a company that has withstood a lot of that, and the relative safety rating in VectorVest means a lot, doesn't it? And for them to be walking in here with a 1.1 means that they've been able to fare pretty well through what's been very turbulent times for a lot of the retail major chains. So if I were to pick a stock from retail major chains, Target looks like it would be very, very high on the list, probably the one on what I see there. I like what I see. Really do.
Patrick?
Looks good to me.
So the cool thing is about a lot of the things that we're looking at or that we're analyzing stocks with, when we talk about the fundamentals, we look at the relative value, relative safety. Nobody else has that out there. So we do look at moving averages. That's out there all over the place. We look at support and resistance. That's out there all over the place. We look at earnings yield. We can look to see if a stock is under or over its value. Steve talked about one of his stocks being overvalued, but why it was overvalued. But that's the kind of information that you need to have at your fingertips to make a decision. We're looking at relative value, a stock's long-term upside potential as compared to a AAA corporate bond. We're looking at relative safety, the indicator of risk for the stock's ability to meet or exceed its earnings expectation. These are the things that make VectorVest what it is, and why it's important, if you're not a subscriber, to at least try the software. Just try it. That's all I gotta say. Just try it. But a lot of what we're doing out here is what you can do anywhere. But a lot of what we're doing is proprietary to our software, which you can't do anyplace else. And our earnings per share, just to let you know, is forecasted. So when you're watching a stock and you're looking at the earnings on the stock, it is forecasted a year out. Why is that important? Well, I want to make sure that if I'm getting into a stock, that by this time next year, if it's projected to be at this point, wow, that's a stock that attracts my attention. So when we're looking at these stocks that have rising earnings, they are projected or forecasted, but that's important. That's important. All right, that's all of the stocks. So we talked about the winner. Who won the 2-day, and number two, the next thing we want to do is hopefully Clay has got an email for me while Steve talks about a little bit about the 2-day investment course.
All right, cool. So yeah, great opportunity I think for everyone. All you have to do is go to www.vectorvest.com/events. That'll take you to a place where you can learn more about the Tampa 2-day. The Tampa 2-day is always our big kind of grandiose event for the year. Tons and tons of VectorVest subscribers will be there. There will be subscribers there that have been coming for the last couple of decades, and so there's something there that you're gonna, everybody walks away with knowledge. No matter whether you're seeing VectorVest live and in action for the first time, or you've literally becoming every year for the last 19 years, like I've been going to teach it. I think I've missed one. Of the last 19 anyway. But what's going to be really cool is we're getting back to where we began with the 2-day, at least when I started teaching it 18, 19 years ago, man, it's a long time. But we used to split things
You're
out.
old.
I know. You see
I'm the oldest.
see how
I'm the
these
second
great-
oldest guy in the room.
Man, I'm catching up. But we're going to split out into 2 tracks, and that was awesome then, and it will be awesome now, because what we're going to do is we're going to have one track that's going to be more retirement-minded, more VectorVest, simple approach. We're going to have a separate track that's going to be more VectorVest aggressive, if you will, more of a trader's track. So you'll have a retirement-minded track, a trader's track, and you'll have the ability to look at the agenda on the website when you go check it out. And you'll have the ability to even bounce back and forth between tracks. So there might be something that you're super comfortable with on the retirement track already, and you have this opportunity to bounce over to the trader track if that presentation looks like it might interest you a little bit more, and then bounce right back over, to the retirement track. So it's going to offer up a ton of flexibility. I think that's going to be something that's been long overdue. We do have a wide difference between people that have been with VectorVest for nearly 20 years to people who are just coming on board. And so it's going to offer up truly something for anyone who comes. And you can also attend these via live stream. And you'd have the same capability, am I right, Joe, to kind of bounce back and forth between tracks. So I know those guys, they're going to have some challenges. It's going to be fun for them to work through some of those things. But I'd expect a first-class production, as you always should, from VectorVest. We pride ourselves in providing the best educational experience anywhere at any price. And at $295 early bird, that's the current special price for this 2-day event. It's 2 full days. And when we say full days, we mean full days, buddy. It's very informative, and for that price, it's hard to pass up. It really is. I don't want to go on and make this seem like some kind of huge sales pitch. I just tried to do a little ditty from the heart. I've never had anybody upset at going to the 2-day, and I've never had anybody really upset at going to any of our courses.
I agree with that.
But we got courses that cost $3,000 to $4,000. This one here at $295 is a bang up event.
All right. Thank you for that, Steve.
You're welcome.
So while Steve was doing that, I was able to put into a watch list some of the stocks that you guys have been chatting in as a group, as a panel. We're going to look at these stocks. So there's 6 stocks in here. Before we get started with those stocks and us analyzing them for you, I would like to, if you like the presentation that we're doing here, we are also on YouTube Live every Thursday at 2 o'clock with Trending Thursday. I will do a segment every Thursday from 2 to 3 o'clock here on YouTube where we talk about what's going on in the market, what news is driving the market, and what stocks are in the news that we can use the VectorVest software to corroborate the story, whether good or bad. So that's every Thursday at 2 p.m. And just to go back to what Patrick does every Thursday at 11 a.m. is the Facebook Live, utilizing the mobile app, and going back to Todd, Thursday as well.
Thursdays at noon.
Thursday at 11, Thursday at noon, Thursday at 2. 2 of us are live doing presentations. Todd is not, because he's just not. But
And if you like VectorVest, make sure Thursday's a day off for you.
there you go, because you got a lot of information coming out on Thursdays. And always, if you are ramped up in the software, 2 p.m. Eastern Time is correct. I don't like that name. That's a lot of 6s. I don't like that. Anyway, also, just to also keep Steve in mind, because if you are ramped up in our software and you are part of the Derby, you have the Derby tool. Steve and I mostly do the jockey clubs, where it's a live trading room, utilizing the Derby, and Patrick is also part of that as well. So this is a big part of the education department that you see right here. We also have Jerry D'Ambrosio, we have Jim Penna, but what you're looking at is the crux of a lot of what gets done. So there you go. Now, shameless plug. I don't mind it. I'm shameless. So keeping that in mind, here's the top 6 stocks that were sent out to us. What I'm going to do is simply just go real quick look at them. Bank of America, I know that that's a Patrick favorite stock. Patrick likes Bank of America. You still like Bank of America.
Well, not right now, but I do like trading the stocks. It's one of my favorite stocks to trade.
All right, CYBR, Altria, Philip Morris bought back MO. I did that in a Trending Thursday story. Something to keep in mind. Halo, cannabis, somebody's looking at weed stock. And Crystal Biotech. So we looked at them all, sorted by VST. Only 2 stocks have a good combination of value, safety, and timing. All right, a couple of stocks have,
Speculators.
Yeah, there are some speculators in here. Speculators, mount up. All right, I don't know why that came. This was just music and I don't know.
I got where you're going.
Okay, yeah. Some people got that. Most people didn't. Anyway, let's go click on Graphol. Todd's sitting over there going, what?
Yeah.
So one thing before we get into this.
Yeah.
I forgot to mention it. When looking at, you can stay on the graph here.
Okay.
We were talking about the NASDAQ trade, and you were talking about the Trump tweet that could possibly come out. That is one of the things that I liked about specifically the NASDAQ right now is it has the most to gain or lose with all the news-driven stuff.
That's true.
Especially yesterday, they came out. Fed says they're going to be accommodative. Market still tanked right after that. And everybody says now the focus is going to be on China and the trade tensions going on. That's why I looked at all the major indices and I chose the NASDAQ to be the number one.
It's a good pick.
Because it's going to be the most to gain if something does positive does come, or the most to lose if something negative comes out.
More specifically, the semis.
Yeah.
Like SOX short could
Techs.
also be very, very interesting.
Yeah.
That's probably going to be the most painful.
Yeah.
Yeah.
So that's, I just want to throw that out there as another side point to look at.
Groovy, man. Look at the SOX too.
All right, real quick. Everybody's going to give just a real short dissertation. A dissertation short? Anyway, we're going to give a short blurb, each one of us on each stock. What catches my attention on Bank of America is moving sideways. Earnings looks good, but the stock can't get out of its own way, and I think the stock is trending down it's hitting lower highs from the last high over the last year. Anybody else?
I can see immediately why Patrick likes it. Go, Patrick, go.
Go, Patrick, go.
No, I haven't touched Bank of America in since the beginning of the year. It's just been channeling, like you guys have been saying, until we break above. I think it's like 3150, almost 32. Until we break above that point, or if we break below to the downside, I believe it's
this
right
low
around,
or this low?
No. So if you just drew a line over since May, those 3 lows right there, just try to get an average between those.
Here you can take off support resistance.
Yeah.
You talk about this here?
Draw up a little bit more. Yeah, put your line on and move it up. Up, right there. Down just a little bit. Down a little bit more. Yeah, right around there. That works. Good general area. You've had some touches on it. You've never had any follow through to the downside from that. So just a quick look at it from a support floor. The upside would be about the same. Just taking a quick look at the average on the upside there. Drop down just a little bit. Yeah, 31, let's call it. It's never been able to sustain a price above 31 for at least in this most recent run. So until it breaks out of that sideways channel, I'm just sitting tight. And if you want to try to play that sideways movement, good luck. Be careful. This is my best advice.
Actually,
I thought you'd
I'm
like
going
the
to throw.
gapping action and that you'd play the gaps with the floor and that you'd take the next run.
I'm not a sideways channel trader. I don't like it.
I will say this: if you are going to try to play the channel, play the bounces, this is the one time I would use stochastics. I would use that levels from the lows to the highs. This is probably. I'm not a big fan of stochastics, but this is a stock that I would play stochastics on.
Yeah.
From that perspective.
If you get to the low side of the range, stochastics is going to be oversold. But yeah, I get you.
Too much whipsawing in that sideways movement. You have to watch it too much.
I would steer clear of banks for the foreseeable future.
Okay.
Yeah.
Let's go to the next one. Cyber. It's moving down. That's that. Gosh, you know something? I can't just say that. Stock's moving down. Looking at a 20 exponential, I like that the stock's price, we put it on a 6-month graph, I like that the stock's price broke the downtrend.
Got a double bottom too.
And
I like that it didn't go lower.
but the earnings is holding in there saying, come on, we can do it, you can do it. Sort of like from the water boy, you can do it. You know, that's what earnings is saying right now. You can do it. It did break the downtrend and it moved from a sell to a hold. All right, that may not be a bad. This is an early play, and you know something. If it can confirm that, it's got a lot of good upside.
Well, it's similar to Steve's end phase price structure, right? Where it's in
Yeah.
that double bottom, it hasn't taken out the prior swing high yet, so it's still not technically an uptrend yet. But it's starting to look like it's thinking about it as it takes out the moving average.
It's beginning to look a lot like uptrend.
And from a risk management standpoint, now's a good time to be getting into it since it just broke above the 20. If it does happen to
Break back by low.
break back down below, you've got a really tight stop to minimize any risk or minimize any loss.
Yeah,
a lot of upside, minimal downside.
Put your stop loss 12 cents below the 20.
Any idea what does that say?
About gold.
Yeah, if you looked at the daily color guard report on Monday, if you are a subscriber, if you're not, gold is still trending lower, even though we still have a
Trending
gold.
up, it's just the
It's
trend
softened.
is weakening.
Softening. All right.
Softening uptrend.
It was trending lower from its most recent swing high. That's what I saw.
Correct.
So that's the way I look at it. I'll look at it from that
Pullback from
perspective.
its
A pullback would be better.
Long-term standing is still pretty bullish, if I recall.
RT pulled back a lot on it. Yeah.
Gold's on the move again as we speak.
Okay. All right. So I gave you my insight, and that's the beautiful thing about having a panel is because you get a lot of different other insights as well.
I don't think the rally in gold's over. I think we're on a little bit of a pullback phase, barring some kind of major, like we get a deal with China, then I swing
interest
totally
rates go
back
lower?
to stocks.
There you go.
But rot's a ruck.
Rats a ruck, fraggy. All right, let's go to the next stock.
Hey, Glenn, before you do that,
Yeah.
Yeah.
stretch that thing out a little bit. Let's look at a 1 year, and then maybe stretch beyond that. See, I'm looking for that long-term trend, right? So now in that context, the pullback, it's now a pullback in a.
That's a big pullback over the last.
Still, yeah.
Yeah, that's a
I'm
lot
with
of.
you.
That's a lot of pullbackanosity.
Yes,
It's
is.
pulled all the way back up to that gapping
That gap,
point.
yeah.
Yeah.
Actually, it didn't get there. It's close. It didn't get there.
No, the
No,
one
no.
above that.
Oh, this one.
That
Oh,
one,
it
yeah.
pulled back to that gap.
So double bottom at support.
Yeah.
I like the pick.
That may not be a bad. That may not be a bad. Could be setting up. Touch there, touch there, touch there, and now broke above that 20. That may not be a bad pick.
Time frame is time frame.
Time frame is time
I'm
frame.
going to venture to say it's a pretty good pick.
Okay, I love the earnings on it. I
I
do.
don't like may not be bad. I like pretty good pick.
Well, the first thing I said is that it's going down, and then I'm glad I backed up a little bit.
Yeah.
All right. I still think it's a pretty good pick.
It is.
All right, man. Anybody want to start?
I'll start
Is
with
this
this one.
are these hot stock picks?
No, these are picks from the group.
okay.
These ain't ours.
All right.
So
Steve was like, "What are
I
you
thought
doing?"
I was in the wrong room for a minute.
I think if you look at all tobacco companies, they've been dropping for the last 5+ years, really since 2012 for a lot of them, with more people doing alternatives. Granted, there has been a lot of news driven recently to try to put bans and support and legislation towards other alternatives.
You're talking
So-
about
vaping.
Yeah, vaping and all
Okay.
that. Altria has a lot to benefit from because they just got their vaping device, passed by the FDA.
Really?
Yeah.
See, I didn't. know, I know that Philip got them back.
Yeah, there's two of them, and they're both backed by big billionaires right now. So they have some of the most to gain off of these tactics going on right
Okay.
now.
I think it's a tough bet.
But I think as time keeps going on, you're realizing the news has been more fearmonger rather than fact-based because there's been more and more reports that are proving the main headlines wrong, and so I think people are realizing that. And I don't think this is going to start turning around any time because
I agree with that. I mean, the latest headlines now are that nicotine's actually a problem, and so now you're back to vaping just the chemical, and pretty soon the next line will probably be, no, it's the chemical, they don't really know what they're dealing with, so it's
And
tough.
there's-
I think that once we
it's
get to a
tough
point
market.
of if you breathe air, you're going to get
well,
sick. And
Well,
I think
85% of
you
these
can't drink milk.
85% of these vaping
Issues?
incidences,
I'll have the THC in them.
yeah, have been coming out from.
Well, there's new reports that are coming out now, but yeah, that's.
but
been
they've
the
all
headline so
admitted to
far.
using black market.
Yeah.
THC
There's new
cartridges.
reports now. Just you may not
Yeah.
have seen them yet, but there's new ones.
There's a whistleblower. I'm sorry, I didn't mean to say
Yeah.
that.
But yeah, there's a lot of
Sorry.
reports that stuff are coming out with vitamin E acetate in them, and they're not from a regulated source. If anything, this just gives more support to
Yeah.
regulate, have more oversight,
Yeah.
and open things up more so than try to just push things more to the black market.
Be careful with it. I think overall.
Yeah, they had
Yeah.
they had a big feature on it on CNBC last week, and the feature on that one was about the nicotine, and it's now harmful. So it's I'm just telling you what's
And
being
again,
said.
but they're also going to keep coming.
They're
Yeah.
also the ones who are saying it was the.
I know.
I-
But
it's- so it's going to
know.
be. So be careful. Overall, I think the
that's why I
panel.
don't like the pick.
I
Nobody
don't
knows.
think-
I think that the panel's choice on this is just be careful with this.
Yeah.
All right.
So
I'd
what's,
say stay away.
Yeah, I was gonna say, what's the longer term? Was that a 1-year chart?
That was the one.
Inhaling smoke is not
Good
good.
with 5
Can we
years.
all agree on that?
Stay away.
Yeah,
Yeah.
I still nothing. It's lower than it was 5 years
We
ago.
probably shouldn't be inhaling things. I think that's probably.
Alrighty then. Well, does that include air?
that's
I
always
told
the
you not to
number
go back
one-
to air.
That's always the number one
I was
option.
going to say, for those of us in the room who experienced the 60s,
I'm just going to break it down.
That would be you.
I'm going to break it down. to the
All right, guys, we're
simplest
getting close
terms.
to being demonetized. We keep with this.
Oh boy, Halo. Let's look at Halo real quick. Another one of those sideways moving stocks over the last year. What I do like is that earnings is getting less worse. All right, earnings is negative, but it's getting less negativer. I don't think I'd like it now. I do like that it's
Wedge.
Patrick would see the wedge. It does have, well, almost high. No, it's not higher lows. I thought it was, Patrick, but it's not. If I drew a line drawing up here, that is not higher lows.
well, it's higher lows, but a trend line break is what you're.
Right.
So it's breaking down to the lower part of the wedge.
There we go.
There you go. For any Jockey Club members, you're welcome.
And
Wedginator.
there's the
Strikes
Wedginator,
again.
Patrick. Let's go there we go.
If you're a Jockey Club member, you haven't already hit subscribe, make sure to do that because this is for you guys.
All right, think about that. Below the moving average and below the wedge.
Came back, retested, and now starting to fall away.
Yeah, I do like the better earnings, but yeah, I'm not feeling this. I'm so not feeling this. Anybody else?
I mean, when you pop open a graph and you look at it and you just try to put yourself in, if I've been holding the stock for the last year, has it been a good ride?
No.
That's
the
I
answer.
think it can be that simple
Okay.
sometimes. It's going to drive you nuts, no matter what it does. And even if you're right, it's going to drive you nuts.
Yeah, and it's very whippy too.
There's just too much volatility, even for a trader, right? Because we like to use tighter stops and things a lot of times if we're going to be trading. So
Now, you could have played this wedge. You could have played this wedge.
Yeah, if you're spending all day looking at it, it's a
Exactly.
great stock. But if you actually have things to do throughout the day,
This
is
is
not a stock
tough.
for you.
This is a tough stock for
you
that.
could, I suppose.
All right, let's
Lots
go.
of luck.
Lots of luck on that too.
Bold move.
CGC, weed, baby. Looks like it's got the munchies. That's all I got to say about that. It had a run. Earlier this year, weed stocks were running. It flattened out, and look at that. The stock is just tail dove. Something.
Summer was brutal to all the pot stocks
And
this year.
stock has mainly been a sell since July and just been moving down below the moving average of 20-day moving average. Could have found the floor. Could have said that here. Could have said that here. Hey, found the floor. Hey, found the floor. Hey, found the floor. And it keeps finding the floor and it keeps finding more floor. It keeps finding more floor. I'm not feeling that one either.
I like the fact that earnings are starting to turn around for the first time
In
the
a
last
long time.
year, probably
boy.
even longer than that. So that's positive that you're seeing major analysts, expecting the stock to start turning itself around, start moving higher. But until I see some sort of technical breakout to confirm that, it'll keep on my watch list, but I'm not going to take it anywhere past that point.
I ain't watching it.
Yeah, I'm starting to see that theme here, right? These were all fundamentally weak. They're in strong downtrends. And okay, they're watch list material, but I'm waiting for the turn.
Yeah,
Yeah.
I mean, I think it's going to take legislation at this point to see any kind of big movement in the marijuana space. You know, went up and taught a 2-day seminar actually up in Toronto, and we had a guy there from I should remember his name. I'm awful because Mike was up there from Horizons ETFs, and he's a great guy to listen to. He's very knowledgeable. And they've actually got some marijuana ETFs. They were the first outfit to come out with those. And he was kind of the same opinion, actually helped me form my opinion. He felt like the Canadian companies have already run as far as they're going to run, and I think he's right because we had that seminar in May. So
And look at this. Look at it. That's since May.
and he kind of felt like what we need is real traction in the U.S. And so until we get some real traction in the U.S. or Europe or both, I'll tell you, U.S. is the big one. You know, if we can get some traction on this front in the U.S., then you can see some tremendous opportunity here. Now, you are and have seen for the very first time a marijuana company make positive earnings on their announcement date for the very first time last earnings season.
That was
Afria.
Afria, yeah.
Which is APHA.
Actually,
Just pull that APHA chart up really quick.
Pull it up
Even
in
they are struggling, and they announced a profit, and they're the first company to do it. But they're not struggling as much. You know, they're a little bit more stable. I think if I was going to take a swing at something, this might be one to think about.
but if I'm going to do that, I'm going to look at a couple of things. I got a level of resistance.
While you're drawing those lines, there was that news, at least somebody mentioned a few days ago or a week or so ago in the Jockey Club that there's some banking thing that just happened with some of these, so that way these companies can utilize the banking system finally rather than having to
without
keep everything.
being, so they can actually, so now you can take your money from your weed store and actually, well, no, but I mean, that's what it is.
Just
You
the
can-
word, cannabis. Yeah.
Oh, whatever. It's weed. Yeah, it is. It is what it is. You can take your money from
what
your
is
weed
funny.
from your weed dispensary,
Yeah.
and go to the bank, and the bank can actually take your money without, So that's huge. So all this money they're making, they can go run to the bank now and go, "Hey, take my money." The bank can say, "Yeah, okay."
What a wonderful world.
What a wonderful. That was a great song.
Yeah.
They see skies are blue.
Yes, they do.
Okay, and they take their money.
Trees are green.
and the money is green. They see money is green.
I don't think they're going to have that much enthusiasm, though, if they're working at some of these places. A little bit more
Be like that.
mellowed. Hey, here's my money.
All right, I'd be careful with CGC. Notice that the Afria, look at the earnings, and Steve was right. Look at the earnings. Look at the difference between the earnings on Afria and the earnings on CGC.
Well, they're positive, right? That's the main thing.
Yeah. All right, let's go to the next stock. It's the last stock.
Well, all right. Before we go run crazy with the fundamentals on a biotech.
Okay.
That's not traditionally the best way
To trade a biotech.
to look at biotechs. What you got to understand with biotechs is what's in the pipeline. There's obviously something here because the company is literally bleeding money. So there's something interesting in the pipeline. A lot of times in VectorVest, you'll do what Glenn's doing here. You'll click news. You'll maybe go to the company website, learn a little bit more about what they do. A lot of times you can get it right here in the news feed, though.
So this is just a story, though. Before you buy Crystal Biotech, consider its volatility.
Yeah, the chart was volatile.
Yeah.
We saw that. And just scroll down a little bit further. Let's see if there's anything interesting real quick. Hedge funds have never been this bullish on Crystal Biotech, so there's some hedge funds buying in. So it's not as bleak as.
Oh, there you go.
Yeah.
3 months ago.
I can tell you the last time I saw something like that and traded accordingly, I got burned like you wouldn't believe. So don't buy the headlines per se, but all of this to say that there's something interesting in the pipeline. There definitely is, and learning more about that I think would be the right way to go here.
I like that
And what
idea.
you do is you take a reasonable slice of capital that you're willing just sitting on and hope that you're right. Because that's all that you can really do.
But God forbid it goes wrong, it doesn't kill all of your assets. Small portion of your assets Perfect.
Yep.
And biotechs are that way. You can either make a lot of money or you can lose a lot of money. And Steve is absolutely right. It's tough to look at the fundamentals on that. Todd?
I like it. I like the discussion.
Oh.
I don't like the stock. I like
I was like,
Yeah.
this is not a panel of liking discussion.
Something happened back there towards the end of June, it looks like.
Yeah.
I'd probably run back in that news feed and see what that was.
That was 3 months ago. That was their
Those-
phase 2 phase. Or
Yeah,
phase
those-
2.
That was the
phase-
phase
yeah.
2.
Phase 2.
So
All
right.
it jumped
Phase
up
2.
off of that.
So now we're heading into phase 3.
And look at the volume difference.
And if there was what was the run up? It went from 30 to what? 50 or 60?
50.
It went from, in the last 6 months, it's gone from $20 a share.
No. From the announcement, from the trial.
It went from about 30
30 to 50, right?
to 50.
And
This
that
20
was on phase 2.
Yeah.
Imagine if phase 3 goes well.
It can go from
Okay,
something to
so
something more.
Man, we don't have time. Okay, we got to run. But find out when the phase 3 date is coming if you can, and then this would be one to watch.
There you go.
And I'd probably straddle it.
That would be a good play.
If you can get a reasonable straddle. More on that in our options courses. Some stuff you got to know option pricing if you're going to do a straddle. But that looks like it might be a good play.
All right.
Phase 3.
Phase 3.
That's the big phase.
It's okay. So with that, folks, that pretty much wraps up our panel for today. I want to say thank you very much for being here. Thank you. Oh, I got a bundle thing? Hey, do you have something for that? It's on 315. VectorVest bundle, $4.95. $4.95. Joey, you got something up there?
Yep.
Where's it at? They're looking at it? That's not it.
I've got it.
Oh, I ain't got it. All right. So to get there, what's the bundle, Joey?
The trial and SIQC.
So it's the trial in the, what is the SIQC? This successful investor course. Oh, for $4.95? All right, so you guys are looking at it. I ain't. But for $4.95, there's a link. You got the link up there for them, Joey? The link is up there. Click on that link. You get the trial, and you get access to the, what is it called? Successful. I can't get the successful part out of it. Successful investor.
just think successfulocity.
Success. I got it
You'll
now.
get it.
It's the Successfulocity Investors
Quick start.
course. All right, there's a link for it. That's a good price, folks. That's a super good price, especially for those of you who are not subscribers. Take advantage of that. What else? If you know someone that would enjoy this panel, please feel free to share it with them. I read from the piece of paper. All right. If you like what you saw today, share it. As I mentioned, these videos are going to come out. Comment on them.
Tell them to comment their favorite stock that they saw today.
Comment on the stock that you didn't like the most. Or I'm only messing. Comment on your favorite stock. Comment on what you like. Just comment. All right, so just do that. We're going to grow our footprint here. Thank you all for being here.
Good to see you, Mary.
Good to see you. Mary
Thanks
said
for the feedback. Here.
we got a lot of people come and talk. We didn't spend much time with that, so I apologize for that. But Jake, thank you for much. Larry, thank you so much. Joffin, as Steve is talking about people, thank you very much. You guys were.
He was in there.
All right, who's CNA? Oh, that's a stock. I'm not going to look at it today, unfortunately. We can't. We looked at a lot of stocks. We had a lot of talking. No, I just said we're not, and you can no. Anyway, thank you all for being here. All right, and you putting more, really? All right. Adios, arrivederci, ciao, au revoir, sayonara. See none of you tomorrow. Later.